We're going to continue our correction analysis with three simple rules of thumb: stocks that are bucking the trend, stocks that have pulled back the least, and stocks that are the first to move. I'm going to be going through the Magnificent Seven again. Today started off very mixed. There was some gray, there was a little bit of speckles of green, but mostly there was some red stocks. In particular, three that were underperforming the market were Amazon, Apple, and Microsoft. But four, which were already giving us signals of a potential reversal, were Google, NVDA, Tesla, and Meta. I'm going to analyze all of them today. And in the afternoon, the markets turned around. We got everything turned green. The heat map of the S&P 500 looked beautiful. But how long will that last? I'm going to give you guys some fresh technicals as well as my opinion as to what's going on in the market and what to expect. You're going to get a good sense of where we might go on all of these stocks, but we could be setting up for a reversal. We still are in choppy waters. This is the Stocks with Josh show. Guys, thank you for hitting the like. For all those who are new to this page, I load it with tons of content, support and resistance levels. I make predictions and I share my trades and I share stocks that I'm interested in. So go ahead and hit the subscribe and the YouTube all notification bell to get my next stock, crypto, and market analysis. Okay, we are going to start off. I want to share this sheet with you guys. I want you guys to look at it and study it with me. Get an account for which stocks have been performing the best year to date. You see Apple's up 35%, a respectable number, largest cap stock in the world. Beneath that, Microsoft, 41%. Amazon doing a little bit better at 51%. Google still on the move, up 65%. Then you get into the heavy hitter stocks that have been in a markup move. Tesla, Meta, and NVDA. These stocks, Tesla up 137% still, Meta up 150%, and then the big one, NVIDIA, that's had probably the strongest move for sure this year out of any of the big tech, up 205%. We know after all of this big run-up, the market has since been pulling back for all of August. It's really all of September, and we're going to be going into October, and we're near oversold on a lot of our favorite stocks. So what's going to happen? Are we at the bottom yet? You'll get my opinion as we move through these stocks. But here's what's going on. First off, the number one reason why the market is going through this phase is for correction, profit taking, and reorganization going into the end of this year. It's extremely normal. And all of this correction could possibly be setting up for us to make a final move up into the end of the year to reach all-time highs on the market and all of these stocks. Do we have any confirmation of that? Absolutely not. We do not have any confirmation. But when the market's down like this, and I'm going to go through how it's down, when the market's down, that's when fear enters in. That's when people begin to abandon their trade plans. They begin to stop buying their favorite stocks. There's a lot of people that were DCAing into Apple above 180, even though I had warned that it was too high, and now it's down $32 off, and they're afraid to buy any. So let's just kind of review how these have been performing since this correction began. We see that Apple's down around 15.44%, Microsoft down a little bit more, 15.57%, Amazon just a hair more, but all three of these you can see are in the same percentage drawback, 15.65%. Then you've got the exception that is Google. Now, Google's only down 8.39%, and then you can see beneath that Meta is only down the least, down 6.06%. Now, we've got to ask ourselves this question. Are these just moving down slower than the others? Are they ultimately going to get down 15%? We don't know the answer to that. Right now, they seem to be outperforming the others. People are holding on to their Google and they're holding on to their Meta. That could be an indication that these could be even stronger stocks. The way that we'll get a confirmation of that is if we stay above some of the moving averages. And when I get into the charts, I think you guys will see that with your own eyes. So then if we continue the stocks that have been on a downtrend, we see that Tesla actually is finally standing with its peers, only down 15.92%. When we did this analysis about a month ago, Apple was down around 13% and Tesla was down around 30%. So obviously, Tesla is beginning to act a little bit more like the rest of the big tech stocks, only down 15.92%. And then we've got the Meta I mentioned was down the least, negative 6%. And then NVIDIA, which again, it makes sense that it's down 18% because it's had the largest run-up of 205%. Now, I'm going to take you guys into these charts in just a minute, but let's continue to go through this breakdown that I gave you guys. overall, all of these stocks, if you look into the RSI, have come down enough that we could see a little bounce. And that's what we're seeing today. We're seeing some early buyers of this oversold condition. And that's why in my chart, I've put where support is. And in some cases, we've already hit support and we're above it, giving us a little bounce. And then I also put into the chart where the resistance is. Now, these stocks do not confirm to us a longer bullish move until they get above their closest level of resistance, which at the moment, I personally don't see that happening. That would be a fake out to the market. I'm going to be interested to see if these even get to their resistance. If they don't, then even though we're getting these good candles and these bullish moves today, this is just a temporary move up while the market's still intending to go down. And one of the things I'm going to do, besides going into these charts with you guys briefly, is we have to talk about the SPY. The SPY measures the top stocks of the S&P 500, and it has confirmed weakness. I mentioned it to you guys before, that it gave us a confirmed breakdown of a head and shoulders pattern, and that gives us a signal to go all the way back to the 200-day moving average, which looks to be around 418, and also coincides with a previous swing high level. So what used to be resistance now becomes support. But what that tells you is that the overall market is still saying that there's a lot more room to the downside. And so let's just pause right there before I get into those big tech stocks. Let me remind you of something. For the previous 2 weeks, the most profitable trade that I was in were puts on the SPY. And even this week, the most profitable trade that I had been in was puts on the SPY. Now, I had an enormous pump up on some Amazon calls that I've been swing trading, and so that's become my most profitable trade this week. But I got out of those on the move up, and I'm going to be looking to buy them again on a dip. But the SPY is giving me signals that it has not yet moved far enough down to satisfy the downward move to test the lower range of support. And what that means is that even though these stocks, a lot of them are running up today, we're going to watch for them to see what they do when they get to the resistance levels that I show you guys. Now, let me just quickly take you into the SPY before I get into the charts on the big tech stocks that I'm going to cover today. I want to point out to you guys that I'm going to be looking in the long run for the RSI to find support around 28 or 26. And if you understand the RSI, first of all, it stands for Relative Strength Index. We're moving down on the RSI and we're in bear territory. And what I'm going to be specifically looking for, again, is that bigger move to 418, the bigger move to the 200-day moving average. And I believe that's going to put the RSI to be around the 28 or 26% level. Anything below the 30% level puts it into official oversold territory. Anything beneath the 50% level indicates that the bears are in charge. And so no matter what I show you guys with how big tech has pumped today and how beautiful that green heat map of the S&P 500 is, the bottom line is that the overall market is still in a bearish trend right now, and we don't have a confirmation of a reversal of that. All right, we're looking at the daily candlestick chart for Apple. What I want to point out to you guys is a handful of things. So what do we have up on our chart? Well, we've got the RSI down here below, and one, you can see that it's beneath the 50% mark on the RSI. We're nowhere near oversold. We did get oversold when we originally pulled back, which means that we may not have to go back and get oversold. Right now, the fact that we are at a lower price than before shows bullish divergence. So when the stock price goes down, and the momentum to the downside is not as strong, that's bullish divergence. So those are some good positive things in the charts. But one, we're still beneath the 50% on the RSI. You look at the moving averages, we've come pretty close to touching the 200-day moving average. I see resistance at 173.50, and we got pretty close to touching it today. It wouldn't shock me if we hit it tomorrow. If we get rejected by 173.50, then it means we're going to continue to move down until we test these lower levels of support. So the next range to be closely watching for Apple stock is how it relates to 173.50. You remember that for a long time, that 173.50, 174 range, that was our support. Well, now it's going to be resistance. And so we're going to have some trouble getting through that. We're going to be watching that on Apple. And if we fail to get through it, then we're going to have to come back and gain some momentum by ultimately hitting these levels of support. They range from around 168 to 165. All right, let's just jump right into Microsoft. Again, we see some similar things. The trend overall has been going to the downside. We are beneath the 50 on the RSI. I currently see resistance. In this case, we're a little bit further away from our 200-day moving average, where there's resistance above us at 318. Now, there is a support that I didn't draw in here, which is right around 309, and that's where it's come back and it's bounced. You can see this was support before. I didn't draw it in here. So we came down to that level of support. We bounced. We could now get a back test of 318 is possible, but if we fail and we do ultimately break between 309, the only next support that we have is 301, and in my view, it's really moving slowly, but I still think there's room for it to come down to this 301 level. And you can see with the RSI that it has yet to get oversold the way Apple did, so it's slowly making its way down, and personally I think that it's just moving at a slower pace than Apple was, and I do think we're ultimately going to hit some of those lower levels of support. All right, let's get into Amazon. What's going on with Amazon? You can see that Amazon's actually been showing some decent strength, and you can see that the RSI has been consistently bouncing at the same level. Right now, I think we've come down and we've sold off quite a bit. It wouldn't at all shock me if we get some momentum to the upside, and I'm watching the 129.90 level. That's currently resistance, and I am thinking that we could get to that level, which would be a back test of the pink 100-day moving average, which we've really yet to back test. And so we've moved beneath both of the 50 and the 100 very quickly. It would make sense for us to back test 129.90, and at that point, if we got over 129.90 with high volume, then we could think that we might get a back test of the 50, which is the yellow line. But at the moment, I'm going to be watching how it interacts with the 129.90. If it fails there, then we're going to come back and continue to step down in this stock until we ultimately get to test the 200-day moving average. At the moment, it's in bear territory. It's not oversold, even though it's been selling off quite consistently here for a while. You can also see that as we were running up in price, we were also having bearish divergence on the RSI. That was giving us a signal that we were getting very near to the top. And so to keep this very simple, it has to stay above 125 for it to remain bullish and to indicate to us that we're going to backtest the 129. If tomorrow we open and we fall back beneath 125.50, then it does appear to me that this stock wants to hit that 121 level of support beneath it. I had a nice swing trade here today on this pop. I was able to make some calls profitable. I also had to scale into my position to do that, and I've taken profit. Now I want to watch tomorrow and see how we interact with this 125.50 to see if we can get back up to 129.90. All right, let's look at Google's chart. I gave you guys in the past that Google had very strong support at 130, and that's really where we saw it. When it climbed back above, it pushed above the 50-day moving average. Now, out of all of the stocks that we're going to go over today, Google, I think, is the only one that's above its 50 still based on today's move. So it's yet to break down beneath its 50 or its 100. The majority of the other ones are beneath the 50 and 100 already. I will say, though, that I see pretty strong resistance here at around 135, and so if we do manage to move sideways and get to this level and get rejected, as I said before, if we get above 135, well, then we know that we're off to the races again on Google, but if we fail to, it could be that Google is just moving slower than some of the other big tech stocks and has yet to make its ultimate low for this particular trend. Right now, we're still in a tight line of support moving to the upside. We've yet to break that. Well, if we get rejected at the 135 level, then we need to watch for this to break down some more. It'll again have to come back and interact with the 130, and if it breaks the 130, then we are definitely going to be heading down to 121.40. All right, let's get into Tesla, and I know Tesla is of great interest to you guys. It's also of great interest to me. Tesla is one of the stocks that's been performing pretty well today, and I just wanted to point out that these support levels that I've given you guys have really proven to be the right support levels. That put us beneath the pink 100-day moving average, and you can see that we pushed back above that yesterday, and now we're back to the 244 level. But again, I'm going to tell you guys that it's very, very possible that this particular move gets us to 256. That's very possible. But there's really no guarantee. If tomorrow we stay beneath 244, then All we've done is just give ourselves a little bounce here, and we're going to go back, test 234, and ultimately go back and test 226. At the moment, I'm out of any calls today because of this big move we've had from 234 to 244. I'm going to be watching it tomorrow. If we begin to build momentum with volume, then I'm going to enter back in for a move to 256. Otherwise, I'm going to be watching for some puts at rejection of 244.80. If we take a quick peek at the RSI, already got oversold. We could easily be moving on this line in an upward fashion. At the moment, it's somewhat pointing up to me, so that's why I think that we could get to that 256 level. And right now, this also looks like bullish divergence on the RSI. All right, before I get into my final two stocks, as well as my overview of what I'm specifically going to be doing with some of these stocks, let me take a quick station break for the Moomoo investment app. If you guys are looking for some free stock and a better trading platform, check out the offer from the Moomoo investment app, where they're giving away up to 16 free stock in the United States. And as of today, right now, Canada is finally offering you guys a sign-up bonus if you deposit some funds. So this is available in the US, Australia, and Canada. You got to click on the link to take you to the exact offer that's available to you. But the good news is, for those who are trading in Canada, you can now deposit money. You can get a nice little sign-up bonus, and you can begin to trade with some better trade tools. Guys, get the free stock and start investing with better trade tools. Okay, let's cover our last two stocks, as well as a little bit of an overview of what I think is going to happen in the days ahead. All right, let's look at Meta. Meta is one of the most bullish charts that I'm looking at today because it had just an absolutely incredible bounce off of its 100-day moving average, which was a 287 support, which, if you follow this channel and you're in the Discord, is a support level that I gave you guys. And so it came down, it hit the support level I gave perfectly, and it gave us this incredible hammer. This is this incredible hammer candle. This whole candle, it was signaling a move higher, but where again is it going? I kind of see a descending channel for Meta, which ultimately is bullish, and I see the top of that channel being between 308 and 309. If we hit this and get rejected, could easily bring us all the way back to the bottom of this channel. I'm not predicting that at the moment. If this continues to be as bullish, I mean, look at how bullish these three candles are. These three candles are incredibly bullish. Every single time this thing is sold off, it's been met with buyers. And so it's just as easy that if we get above 308.40, it means that we could easily be moving all the way back to retest the local high. The RSI is in much better shape than the rest of big tech because it's currently sitting above its 50-day moving average. But if this breaks down, you guys can see that it's at a point where it could lose momentum. It could hit that 309, and it could then be pressed to go down further. I know that for some people, when they hear me say it could go either way, obviously the stock can always go either way. What you get on this page and what I share with you guys is the research of where support and resistance is. And so depending on which direction this stock goes based on news stories or the macro environment of the stock market, we then have some idea where we might bounce or some idea where we might get rejected. All you're getting is not a prediction as to where this stock will go. You're getting the caboose strategy, which I shared with you guys the other day. It's like a train. The engine is got the Fed up there. He's making all the controls. He's either going to fire it up by printing money, which is the coal that gets thrown into the engine, or he's going to pull back on the brake and cause everybody to fall out of their seats. But he's in charge. I'm not in charge, right? Up there with him is Nancy Pelosi. The two of them are dialoguing about it. They're the ones who are going to take this thing forward to determine where the market's going to go. They know a heck of a lot more than all of us. Right beneath the main engine car, you're going to get your Black Rocks, your State Street. Each of them has a car right beneath the engine. They pop up there and give him some opinions and tell them what to do. Way back at the end is ultimately the passengers, and then at the end of that is the caboose. And what I want to do is, once I see which direction the market is going, either forward or slowing, either speeding up or slowing down, that's when I have an idea based on the research where these stocks, like I said, where they might get rejected or where they might bounce. I'm either going to go into some put options where I see rejection, or I'm going to go into some calls where I see a potential bounce. That's what trading technically is all about. All right, I realize I just have one more stock to cover, which is NVIDIA, so let me take you into the charts there. Time I covered NVIDIA, I told you guys that we were watching the 420 level very critically. And I'm going to tell you guys that continuing to move forward, 420 is a critical area that we need to keep our eye on. But right now, we've pushed up against resistance at 431. Now, it's in a similar place as some of the other stocks that we've been covering, which is it's kind of pushed up to resistance. And so tomorrow, we could see rejection. If we get volume and a move up tomorrow to at least 433, 434. In my opinion, it's likely that we're going to be watching it for a continuation all the way back up to a back test of the 50-day moving average, which would be around 455, maybe even as high as 460. And don't get too excited, because when a stock drops beneath its 50-day moving average and it back tests it, and it gets rejected, it typically is a signal for a much bigger move down. Ultimately, we have some different levels of support. You guys were given the 409 support level, and that proved to be 100% accurate. That was an initial bounce off the 100. If we stay beneath 431, we come back, we break 420, that's confirmation 1. If we come back and we break 409, that would be confirmation 2, that we're going to get a much bigger move to 383. At the moment, I'm going to be watching this with the idea of going into some calls. If we get continuation above 432 tomorrow, above 433, 444, I'm going to be taking it for a push up all the way to 455. But let's kind of look at the RSI and see what sort of story that's telling. Well, the story that it's telling is that we are absolutely not in bull territory anymore. This is bull territory up here. We are clearly down in bear territory. We simply came down to a place where we were getting close to being oversold, so we've got an initial bounce. But similarly, when we get back up to around 156, we might be getting to the end of that upwards momentum, only to come back and ultimately get oversold. And if we go into my areas of support and resistance, I'm saying that at bare minimum, we're going to come down to 383. We'll probably see a bounce there, but ultimately, this thing looks like it wants to back test the 200-day moving average at 350. But as I always say, guys, the stock is not going to get down to those levels of support in one day. They're never going to go straight down. It's kind of like stair-stepping yourself down and stair-stepping your way up. So we're looking for that back test on NVIDIA to the 50-day moving average. We'll be watching for rejection, which I think would be pretty probable. We may not even get there. We could get rejection tomorrow and fall back beneath that critical level of 430, and then we'll see how it interacts with 420. But if tomorrow we go into a selling pattern, I'm going to enter back into puts on NVIDIA to go back to 430, to go back to 420, and then ultimately back to 409. And so why is all this happening? Why are we in a downtrend? Why are these stocks still selling off? Well, it's just like I said at the open. There's profit taking. This is simply a correction. It could be setting up for a much bigger move going into the end of this year. This is also reorganization. All of the stocks that people have taken risks on, they typically reorganize between August, September, and sometimes the first part of October. They reorganize their portfolio to get the best result going into the last quarter of this year. They're also reorganizing their portfolios because they're getting updated information and they're trying to take advantage of that data. That's why we're going through this. Profit taking, basic correction, possible move to the upside. But then, of course, there's the fact that we are at war with the Fed. Man, if you are invested in stocks, you're at war with the Fed if you're a bull. If you're a bear, every time he gets hawkish, you know that the markets are coming your way. But if you're a bull and his hawkishness remains, you know that it's going to push down the market because it's going to create a credit crunch and it's going to cause a lot of trouble. In particular, the stocks that have underperformed all the rest. I'm talking stocks like NEO is one that gets talked about a lot. Lucid is one that gets talked about a lot. Or any company that right now simply doesn't have profits. They're the ones that are going to be hit the most because they've got to do what I always tell you guys. If we go into a lean environment with a hawkish Fed who's making money expensive, then they lose their terms of negotiation. They got to go out and raise more money, which causes dilution, which means that the share price has to come down. So I'm going to tell you guys that what's been underperforming all of 2022, companies like ChargePoint would be another example of them, or PayPal. Believe it or not, if they were underperformers, and the Fed remains hawkish, they're going to continue to be underperformers. I'm going to post these charts that I made today in the Discord. It's the Patreon that I have with the Stock Squad. That's Stockmo, Stock Up with Larry Jones, and Keenan Grace. We all work together to provide you guys daily market data, analysis, predictions, and trades. And I'm going to post these charts that I've created as well as this overview in the Patreon today. If you're not in the Patreon, there is a link in the top pinned comment to join the Patreon. It's getting better and better in the Patreon. We're continuing to put more and more value in there. I recommend you go check it out. Come join it and see if trading with the four of us doesn't help you guys a little bit. All right, I'm just going to give you my thoughts after spending the day analyzing these stocks. This is just a summary or a conclusion of the ones that I thought were more bullish or more bearish. Now, it doesn't mean sell these. It doesn't mean buy these. But based on the support and resistance that I gave you guys, take these thoughts into consideration. Amazon and Netflix. I didn't cover the Netflix chart today, but I'll just tell you I did spend some time looking at it. Overall, I had said the last time I covered Netflix that it was the worst performer out of the Magnificent Seven plus Netflix, and it continued to underperform the market today alongside Amazon. Amazon is still under the pressure of the lawsuit, and it hasn't really begun to pop. Even though we had a nice day today, it was underperforming the market, and so I'm going to say that it performed weak today, not as strong as I would like. Microsoft and Apple were neutral. They underperformed some of the other stronger stocks. So just take that with a grain of salt. There could be more room to the downside for Microsoft and Apple. They performed in a neutral way. And then the ones that seemed to do quite well today were Tesla, Meta, NVDA, and Google. All four of those were showing some pretty good strength. There could be more room to a higher move up on those tomorrow before they intend to capitulate if these markets, as I am seeing them, are going to remain weak for a little bit while longer. And so let me just wrap up by saying I am doing less trades. I am far more focused. I've been rotating mostly between Amazon and Tesla and the SPY and the QQQ. Pretty much those are the four I've been focused on. Everything else I'm doing and how fast these markets are moving and the choppiness in which they're moving, I would say that the market is not favored being in a bunch of different plays. I'll also leave you with this. All of these stocks have come down nicely, as I showed you that the majority of the Magnificent Seven were down about 16% already, and I still think that that puts them on sale. If you were DCAing in any of those in July and not DCAing now into your long-term portfolios, then I think you've got it turned upside down. So I've been doing some buying in my long-term portfolio because, again, I see them as being on sale, and you need to choose to buy and add to them at some point throughout the year, and it seems like a better spot to add to them now. Doesn't mean that they won't come down a little bit more. I'd be happy if they do. But that wraps me up for today, guys. Let me know in the comments section if you have any questions on these stocks. And of course, I look forward to seeing you guys in the Discord as well as the Moo chat. I'll come over there a little bit today as well. Take care, all my friends. Peace and blessings. See you in the next video.